Picture a fintech, not a big bank. A lean team, a clean app, customers signing up every day from their phones. One day, someone applies for an account. They have a government-issued ID, a clean photo, an address that checks out, heck, even 7 years of credit history with a few late payments, just enough imperfection to look real. Every signal you have says this person is who they say they are. You approve them, but 30 days later, they're gone. And so is the $40,000 you lent them. Here's the part that should bother you. That person never existed. The ID was fabricated. The photo was generated by an algorithm. The credit history was stitched together from a bunch of fragments of real data belonging to real people. People who will never know their information was used. The whole identity was built in about 20 minutes by a piece of software, and it passed every single check your system ran. This is called synthetic identity fraud, and it costs the industry roughly $95 billion each year. And the attacks that cause the most damage, they are not the ones that fail onboarding. They're the ones that pass it. So here's the question this episode is going to answer. How do companies that get identity right actually build it? And what does that mean for everyone building on top of them? One of the most consequential decisions inside that white space is identity. Today, I'm sitting down with the CTO of a platform guarding that gate for Google, JP Morgan, Stripe, Meta, Airbnb, and many others. His name is Hal Lonas. And before he was doing any of this, he had his eyes set to the stars. This is Leaders One-on-One by Fintech Confidential. Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. So today's guest is Hal Lonas, the CTO of Trulioo. Now that's spelled Trulioo. Yes, that's pronounced Trulioo. And one of the things that is really interesting about them is that they operate across over 195 different countries. They cover more than 14,000 document types. They check against over 6,000 different watch lists and over 700 million business entities. And just kind of give you an idea, their customers include folks like Google and JP Morgan, Stripe, Airbnb, Meta, and a whole lot more. Hal, welcome to the show.
Thanks, Ted. It's great to be here.
So before we get into the problem, and we're going to dive pretty deep into the problem, you've got a degree from MIT in aeronautics and astronautics, but you went through that path and it seems like you might have gotten a little impatient and was like, I got to do something that moves a little bit faster. Help us understand what fueled that pivot, and even more so, what is the one thing that you learned from all of that you've brought into fintech?
Yeah, thanks for asking, Ted. Yeah, I got my degree in aeronautics and astronautics, stuff that flies in space and in the air. And my first job was with Northrop Aircraft. And I realized pretty quickly that, you could work on something for years and it would never see the light of day because of funding changes or other things. Just, it took a long time. Started a little company with a couple other guys named Bright Cloud. Our ambition was to classify the entire internet, which I think we were actually pretty good and successful at. I got into cybersecurity a few years later and then went on to Webroot and now Trulioo. And, the takeaway from all that is that reliability is king, really. Whether you're flying in space or whether you develop fintech software, it has to work all the time, every time.
You're building a fintech product. You want to offer digital assets, but wallets, that's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Dfns. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Dfns. MoonPay scales wallets securely with Dfns. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Defense to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Defense wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Defense, secure wallets built right. When you start to look at identity verification, you really get into it because it's that 1% or the edge use cases that maybe you don't think of is really where the disasters just really start to happen.
We just have to close the loop on those as quickly as possible. And we have to engineer things just to work, just as close to 100% reliability as we can. The stakes are high because, like you said, the losses in financial crime and fraud these days are huge. And so getting it wrong is very, very expensive.
What gets really interesting is we as individuals and consumers feel that gate come into play. And that's where the fraudsters really start to have their fun, is trying to figure out how to get past that initial gate. As I was reading in one of the papers that has been written by Trulioo is how these fraudsters are building these profiles. They're piecing together pieces from multiple credit reports. They're taking a social security number. They're doing all these different pieces. The part that I found really, really interesting is like they would go out and get a low dollar credit card and buy stuff and pay it off and buy stuff and pay it off for a year. So like they're looking really, really far out. And so what ends up happening is that the financial services company will look at this and go, hey, everything looks fine. Everything looks great. Heck, they'll even miss a couple payments to make it look really, really good. But then 30 days after they've gotten the product or service, they're nowhere to be found. It doesn't exist. I'm sitting here thinking, as a fintech founder or as a financial institution, I'm like, yeah, but my system should catch these things. And one of the interesting numbers that I've found and seen is that 96% of the folks that have this problem think that they've got it under control. But what is actually happening in the background for them?
So I think of these companies that we do business with as having two parts. One is the compliance and the fraud prevention people, and the other one is the business people and the product management arm. And they say, hey, I want to onboard more customers. And the compliance and the fraud people are saying, wait a minute, are they good customers? And then sometimes, to your point, that the new user gets let in the door, they get through the gate, and then they start a sleeper account. Mm-hmm. And everybody takes their eye off the ball and they say, well, that must be okay. It made it, 10, 20, 30 days. But then the real mayhem starts, right? And then the money starts flowing out the door and it's too late. So it's just an interesting kind of yin and yang, balancing act between these two forces.
Many have tried to figure out how to catch it ahead of time. But I think one of the biggest concepts that we'll be talking about today is detection rates. Like, everybody likes to talk about how many things that they've detected, but it's really not a really good way to measure the defense. The real honest measure of this is something that I think you and I talked about, was like the feedback loop. How fast can you get that feedback? Walk me through why the standard metric doesn't work and why every vendor likes to lead with it, and then why the compliance teams are reporting on it, even if it is the wrong number to be reporting on.
It's this number. It looks really good. They give examples of, here's the bad guys I caught, the synthetic identities or the bad actors. And so they show these examples of, here's all the bad stuff we caught. But to your point, the false negatives, otherwise, the bad actors who get through, those are the false negatives, right? Nobody wants to talk about that because that's where the $95 billion in financial loss comes from. And so really we should be talking about minimizing those, the false, negatives, getting through those, that pass we gave people should be what we minimize. And the quicker we close the feedback loop on that number, so the quicker that the financial institution recognizes, admits, and in nirvana would get back to the vendor or their own team and say, I missed 1, or I missed 10, or I missed 20, then the process can start to make that better. If they don't admit it, if they don't own up to it, if they keep looking at sort of the happy path of how many bad actors we caught, what is the detection rate, then we don't learn from it, right? We don't get that feedback loop going. As
I talk to clients at Voalyre, like we look at this, and the question we like to ask is like, how fast did you respond to it? Like there are a lot of things that can come in. You can get, heck, there was one that we were talking to that had 20,000 alerts, and they were so proud of their 20,000 alerts. But when we really dug into it, it was really 3 or 4 things that were causing those alerts. And if we were able to more quickly adjust for those, the 20,000 alerts would have been 200 alerts.
Yeah, the feedback loop is everything, right? And the response time. And, going back to one of my favorite subjects, space, you think about examples like, Apollo 13, where failure was not an option, right? And they had a huge problem on that mission, but the speed with which they reacted to it and caught it and fixed it saved those astronauts' lives, right? So, it's the speed you respond, and so true in financial, in fintech as well. So, not just letting the problem go on and on, not admitting you have a problem, but turning around and fixing it. And it works across multiple dimensions where that can be fixed, but you got to respond. You got to know you had a problem and get back and fix it pretty quickly.
You have to structurally have systems and processes and procedures in place to be able to support that feedback loop. Heck, even now you look at it and like there's a lot of softwares that will auto learn based upon the decisions that you've made. Is it, why did you do it? And this is a conversation we've been having with some BSA officers as well, is, hey, now we got to make it explainable. So when the OCC or the FDIC or other regulatory bodies come in, the state bodies come in, they're wanting to know, well, how did you make the decision? What did you do to make the decision? So the idea of being a black box just really doesn't work anymore.
That doesn't fly anymore, right? One of the things we do at Trulioo is, we have this very rapid feedback loop with machine learning and what we call adaptive machine learning. So we think about how to apply the feedback loop to our machine learning models, that they get trained and retrained very often. But, I think one question to ask your people, your vendors, your technology specialists is, how often do they update their models? Because to your point, that can be very hard. And, maintaining explainability and an audit trail and how you trained your models, but also being able to update them very quickly, because, you can have the best models in the world, but if you don't adapt to today's attack and get that redeployed pretty quickly, you're just, open for further attacks until you get that done. So you really need the feedback loop, and then like you said, the remediation steps have to be in place, and not by committee, not 6 months from now. It has to happen quickly.
They were using AI to create videos, and the one that always comes to mind, everybody looks at, is the Will Smith one where he's eating spaghetti. And then just a few weeks ago, they released one using DeepSeed where it looked real. Like, it looked super real. They showed a movie clip that wasn't even a movie clip. So it's gotten really, really good. And so the fraudsters are up as we look at it, right? So if you think you can see it, and a lot of times you can still, but the way that we're identifying that it's not real is exactly the way that the fraudsters are going back and saying, okay, well, I need to tweak it. Like, if you really think about it, like, early on, the skin was just too perfect. The lighting was just too wonderful. Like, yeah. I know we spent a lot of time putting the lighting in here to try and make it look as good as we could, but the software would just make it happen. Then we look at the other route where they said, okay, well, if it's too perfect, they're going to see and they're going to realize, they're going to, so they started adding all the imperfections in, right? So I think when you look at it that way, there's a lot of things that go in that. I want to understand from you, like, all these detection models, all these different pieces, especially with the technology getting better, right? How do you win at a race that your competitors are using the same technology as you're using to try and stop them?
Yeah, it's tough. It's really tough. And you bring up some really good examples. And, I think, we kind of describe this internally as it's a bit of asymmetric warfare here, right? So it's not fair. The old school was, you kind of had a level playing field, and, the bad guys had the same tools as the good guys back when they were cutting up government issued documents and pasting new pictures on them. Now it's all computer generated, and the computer can learn very, very quickly and take advantage of weaknesses in the systems. And the systems are set up to let real people in. And so they've exploited the things we're looking for to learn how to defeat the systems. So you have to deploy those models faster. You have to look at lots of variables. We look at hundreds of signals coming in all the time. We look at the behavioral aspects of what the person's doing. We look at how long it's taking them to do it. We look at injection attacks on the signal to try to stop it. We even look at device information about the device they're sending it from. We say, have we ever seen this device before? That's weird. How could Ted and Hal have the same device, and be logging in separately to different banks? So we can make all those behind the scenes connections, but it's very sophisticated and very difficult. We have to look at what these nuances that the bad guys didn't think of. Because to your point, human beings are on the verge of not being able to detect it now, and in the future just flat out will not be able to detect it. So the human, we call them analysts that look at the data that we see come in, and they try to identify these synthetic identities and fraudulent attacks and the fake, stuff that comes in. They're getting to the point where they can't see it. But it turns out that the computer can actually still pick out these fakes through, sometimes they're too good. Sometimes they miss something. Sometimes it's something as simple as, the background of a driver's license isn't what it's supposed to be for the state of Nevada. It just, there's nuances there that you have to just pick up on.
I was looking at an article the other day where they put 4 different documents on the screen. They're paper checks, and they're like, can you pick the fake one? And you're looking at it, and you're looking at it, and you're looking at it, and they all look real until you look really, really, really close, and you see that the line for the dollar amount, the dollar symbol is not a full dollar symbol. It's got like a breaks in it and all the different, very minor. One of the things that you also mentioned in there is like being able to identify the device. Yes, for most of us, we realize that privacy is limited, is really making the consumers less safe. Help me make that case, because that sounds counterintuitive.
It's interesting. There's a trade-off there for sure. So one of the things we hear about in the news all the time is, some company has lost a bunch of personal information about you and me. And then we get free credit reports for a while, right, or something. And so there's a question on how that information is being used by the bad guys. They might try to impersonate us or do an account takeover based on our information. They might even use that information to create better synthetic identities that might have be you or me, but with one thing changed. But I would argue that those losses and breaches are actually less impactful than having sort of the security companies and the folks that are trying to protect us from identity mismanagement and identity theft, from actually being able to use that information, to keep the information, cross-check the information, create consortiums to protect each other. It's sort of like the FBI has the top 10 most wanted, right? And then suddenly we go along and say like, we're going to protect the identity of these folks by taking down their pictures in the post offices. Now, that technology isn't being used much anymore, but my point is that, we used to be pretty open about sharing sort of the bad actor information, and now we've really tightened down. And I appreciate more than anybody protecting people's identities and protecting privacy. But I do think that we're sort of operating with one arm tied behind our back here sometimes in terms of being able to protect people because of privacy and because of concerns about anonymity.
But every time one of these breaches happens, it gives the attackers so much more raw data to work with. They can build better identities. They can really, like you mentioned, make that one little tweak that isn't discernible by some of the systems. Would and why would it not like reduce the data? If the data is not being collected, the data can't be used. Like, how does that not help? Like, if you're not collecting the data or you're deleting the data, how does that not help?
If you don't collect the data, then there's no data to be breached. If you do collect the data, I think it's all about how it's going to be used and what the kind of what's the use case for that. Certainly, we need to allow people to like log back into their bank. The bank needs to track certain information about that person. I think a lot of this comes down to how, and maybe better controls around how data is managed, how it's used, how it's governed, and maybe also something that would be helpful in the future would be some legislation around companies that want to use the information for the good, for the public good. And so differentiate between, hey, I want this information because I want to advertise to people more effectively. I think there's a market out there versus, I want to use this information to protect people and protect financial institutions. So maybe there could be some kind of a, certification you could get for somebody like Trulioo that says, hey, I'm trying to do the right thing here. I want to help people out. But yeah, you're right in a way. Anytime you kind of increase that surface area for the attack, then, you're taking a risk.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how. A lot of times it feels like these financial tools that are trying to assess the risk of the customer, a lot of times, maybe it's just my perception, go a little bit overboard on the amount of data they want to collect. Maybe enough to make the decision today, but to balance it against future information to figure out their risk profile. And does it, if we were to cut that way back to the bare minimum, what's needed to prove who you say you are, to prove the minimum requirements, wouldn't that make it even harder to create synthetic identities?
Yeah, it certainly would. And you're bringing up a great point. And this is something we try to do. We look at that from multiple dimensions. One of them is minimizing friction, right? So the less I ask somebody when they're kind of onboarding with me or they're doing a transaction with me, the less creepy it feels, the less time it takes, the more likely they are to continue with the transaction. The more I ask them, the more they start to feel like, wow, this feels invasive, and they're more likely to bail out. So 100% agree. And the other thing that's really interesting that we do is we can very early on in the engagement with a person or business say, this looks like a low risk transaction. We already know this person. We think this is like probably pretty safe. And we can use predictive technology very early on to say, let's remove the friction here. Whereas for somebody else, we might say, the same predictive technology says, this looks very risky. Like this is something that does not look right. So in that case, I might apply a little more friction. I might gather a little more information, but certainly it's not a one size fits all. To your point, it could be a little more nuanced than that.
The idea there was a technology company that could reduce the friction. Walk me through like what their verification process looked like pre-Trulioo, and then what it looks and feels like today.
ConsenSys was onboarding businesses, doing business, with others after a pretty laborious set of manual confirmation and manual work. So they had this whole workflow. It would take, could take hours or even days to onboard a business with a lot of manual steps. And so, we stepped in and said, look, we can automate a lot of that. And in fact, we can, not only gather information, help you make decisions, we can put together a workflow and put this in place that really streamlines a lot of this work, basically taking that down to minutes. So we're talking like 100-fold improvement in speed and all the while improving security. So this was like a win-win across both speed and security for ConsenSys that streamlined their process and is able to do business now much, much faster in this aspect of what they're doing. So it's been just great.
So is it fair to say that the trade-off between security and speed is really a falsity when you choose to use the right technologies?
So true. And also the other kind of trade-off we mentioned earlier, which is between the sort of the compliance, regulatory anti-fraud people, and on the other side of that coin, the business people who want to very quickly onboard and get down to doing business with a new customer. Like that doesn't have to be like a battle. That can be like a both sides win sort of thing by putting the right technology in place and sort of following best practices. So yeah.
A lot of these systems, a lot of these tools, a lot of these policies, a lot of these procedures are really focused on finding human actors that are perpetrating the fraud, that are using the synthetic identities. We think maybe it's just me, but like I think a room full of people that are just keying away and like applying. That isn't really the case anymore. Let me just kind of like transport us all a little bit forward, right? So we're at the end of 2027. I have my own AI assistant that has been built into a banking app, and I built this really cool tech. Not only that, but then I'm able to book travel. I'm able to pay my bills. I'm able to send Hal some money, thanking him for coming by and chatting with me. But if my AI agent tries to move $500 at 2:00 in the morning, who's verifying this AI?
We're seeing sort of this advent of agentic commerce that you're touching on. So we've moved from KYC, to KYB, and now we throw around this terminology KYA, know your agent. The move towards agentic is going to be very interesting, and we're seeing the rise of it now. And the funny thing about this is that agentic commerce agents just come in and they say, "Oh, I'm just a very sophisticated bot, right?"
But I want the agent to come by, just not the bad
Yes.
bot. I want
Yes,
the
of
good
course.
bot, not the bad bot.
Yes, of course.
How should they be looking at good versus bad bot, I guess, in this case?
Yeah, we actually wrote a white paper last year and went out there with some ideas around this and said, hey, there's some elements around agents that you could know. And we proposed this idea of an agentic passport. And so the passport would contain certain elements like who was actually the developer behind the agent? Where did it come from? What's its origin? What's the code behind the agent? What does the code do? And has the code been altered since its origins? And then who's using the agent? Who's the agent operating on behalf of? It might be buying concert tickets for you. It might be doing, shopping for me. But it's operating on someone's behalf. So some people are behind the agent, the developer, the person it's operating on behalf of.
Why couldn't you use the traditional KYC, KYB frameworks, but just pivot it to the AI agent then?
They're not deep enough. They're not real time enough. So, that a person comes to a website to do some commerce in sort of human speed. Agents are coming at computer speed.
Well, and I think really what you're talking about is that the framework for trust that we have, especially around finances, really assumes, and currently really assumes, that there's a person or a legal entity on the other end of it. They aren't really, today, for the most part, aren't really looking at the actual software that is using it.
Yeah.
It's not really intended for that. One of the things I'm going to pull out of the little nugget you said is that going in to see or figuring out, has that code been tampered with? Is it the code that was there when the originating actor, being the consumer, said, yes, go do this, or has it been altered? Could you dive into that just a little bit deeper?
Yeah, because it's almost like the analogy of a person going in and saying, like, me going and saying, hey, I'm Ted. And there'd be certain checks against that. And like, my face isn't the same. I don't know some of the same information as you. And so we believe it's possible to interrogate the code that's running behind the agent to see if it's actually the same. We believe all these things are possible to show that the code hasn't been altered and that the agent is doing what it says it's going to do, is operating with consent of the people behind it, and is also operating within the bounds that people set.
Walk me through what KYA, or Know Your Agent, actually is, and explain it from the perspective of, I'm a fintech founder that, yeah, I've thought about agentic commerce, and yeah, I've thought about that, but really it hasn't been a problem for me, and why the agentic or agent passport is structurally different from just the agent logging in with like a username and password.
So the passport carries additional information, additional reassurance to the person who's receiving the transaction or about to allow the transaction that this is all possible, and that the agent is who and what it says it is. So it's actually a deeper and more secure check than a username and password, which, you know, as we said before, it could be floating around the dark web somewhere. So we also believe that there has to be a real-time check. So when that agent shows up to do this transaction, there's actually the e-commerce site could actually kind of flash back to the origin and say, does this look real to you, and does this make sense? And this sort of background check would actually be a consortium of, has this agent been seen before? Is it sort of have a high reputation, low risk factor? And is it operating on the internet in a way that I trust?
Can it go fast enough in a transactional piece? Because we all know that when you're buying something online, 3 seconds feels like 3 days. How do you do those sorts of checks for the agents in a way where they don't get so frustrated? Because, I mean, it's humans building it, so you know they're going to get frustrated, that they just pummel with request after request after request, trying to get it through and possibly causing a denial of service attack.
Human beings are not very patient, right? We need things to happen very quickly, and that's true. But I think this could be made to operate at like 100 millisecond speed. It can't fall down with lack of scale. It's got to be very, very scalable.
One of the things I noticed, December of 2025, Google launched their AP2 protocol. And I'm curious, is with an open standard for AI agents, if they're executing financial transactions, what does it mean to you? And what is the signal about the direction the market's headed?
Yeah. So first of all, we're super happy that Google picked this up and published AP2 as an open standards specification. And that's the kind of justification you need behind something to get people to look at it and take it seriously. It also signals that it kind of tells people to be ready for it, that agents are going to go way beyond bots and be very successful. And so it's one of those sort of tipping point moments I think we see out there where the big guys start to get behind it and say, this is going to be an approved standard and it's going to be okay for everyone to use it.
Doesn't having an open standard like defeat the purpose of authenticating these agents?
Not really. So, just in the same way that like fintech transactions happen today under fairly open standards with tokens and network transactions and usernames and passwords and MFA and all the facility we have there now, those also operate under open standards. And really, you actually need open standards, I think, to get buy-in, also to get the kind of rigorous examination and testing to make sure that you didn't miss something or leave, an open back door or something where something is exploitable. So you kind of need that as well for the community to look at it and say, yeah, this really is bulletproof. This really is, not going to be open to attack.
One of the questions that I have is, as we start to look at this, and nobody in the industry likes to answer this clearly, succinctly, or plainly. and I'm looking for an honest answer, like no caveats. In the A arms race right now for fraud, are defenders winning or are they losing?
It's asymmetric warfare. It's not fair. I would say the bad guys are always ahead. They're always going to be ahead. Anybody that claims that they're ahead of the bad guys is not telling you the truth. They're not being straight. And I'll be straight with you and say, I know that to be a fact. The question we should ask ourselves goes back to a previous point, and that is, what is the gap? So is there a wide gap between what the bad guys can do and our defenses, or is it a narrow gap? And we're closing those loopholes and those problems as fast as we see them. It goes back to that feedback loop idea. Mm-hmm. So if we can see problems, if we can anticipate problems, if we can close problems quickly, we leave that kind of that smaller gap between what the attackers are doing and what the defenders are able to counter with. So I think that's the game we're playing. It's not one of ever kind of sitting down, relaxing, putting our pencils down and saying we win. As defenders, we're never going to win. But we can be close to having a small gap as possible with what the attackers are hitting us with.
You get to see a lot of things. Everything from FANG, Fortune 500, all the way down to your traditional e-commerce groups. What is the one thing that most fintech leaders get wrong about identity, the mistake that, if corrected, would change their risk profile more than anything else that they could do?
I think it's them going with the kind of one size fits all, or the I have a hammer, everything looks like a nail approach. The sort of sad truth is that it's a messy world. Identity is a very messy space. As standards evolve, we keep hoping we'll get to something in the future that will be simpler and better. But my guess is that, for the rest of my lifetime, probably for the rest of your lifetime, we're stuck with a very messy environment. And it's going to continue to be messy for the foreseeable future.
So we've got founders, we've got operators, we've got compliance leads, we've got CTOs that listen in and watch the show. If you were to give them one piece of advice heading into the rest of 2026 and looking at what is possible for 27, what is the one thing they should do differently this quarter to prepare for that?
Ask your vendor what they're doing about false negatives and about not just their true positive rate, and ask them for numbers that span that very specifically, and ask them what they're doing to improve.
If there's one thing you want the audience to understand about identity, about trust, and what's actually at stake, what is that one thing?
I think it's the trade-off between security, speed, friction, low friction, and understanding that sometimes those preconceived notions are false. Sometimes we look at those things and say, I can't do this because it'll cause too much friction, and or I'm giving up security for speed. And I think if we look at it the right way, there doesn't have to be the trade-off we think. It's not a zero-sum game.
What are the things that I missed today?
I think technology right now, I know from my point of view, there's a lot of uncertainty around what's happening with AI. And not just with identity specifically, but with like SaaS and all of software development. And I think people have taken a bit of a pause in a way because they're almost afraid to make investments in the tech or in further development because they're thinking maybe AI will do that tomorrow. Maybe AI will do my job, or maybe AI will save me from having to hire 5 more engineers or 5 more analysts. And I'm a little afraid that this pause we're taking right now while we sort out AI is opening up yet another window for the bad guys. They're not taking a break. They're not wondering if AI is going to do their job. They're leveraging it every day. And so I worry a little bit that we're in this sort of a bit of a holding pattern right now across the tech industry. And I'm just afraid that we're giving the bad guys some space here that they'll take advantage of.
That is very interesting because we're seeing today lots of people, unfortunately, being laid off with AI being identified as the piece. But we also at the same time have the CEO of NVIDIA saying that the cost of compute has exceeded the cost of the human that was doing it to begin with. I appreciate you coming in and sharing that insight with us.
Yeah, thanks, Ted. It's very interesting times and great to talk to you.
Folks, Hal Lonas, the CTO of Trulioo, this has been fantastic to have him on. Again, Hal, thank you so much for being here. If you've liked what we covered today around architecture, around synthetic identity, fraud, the AI arms race, everything that goes underneath of it, especially with the best operators, you've mentioned how some of these folks are handling these things. If any of this landed for you, go ahead, head over to YouTube, Spotify, Apple Podcasts, heck, even head over to Fintech Confidential. Sign up there to find out what we're digging into, how we're diving into it, and really understand what's going on in the marketplace today. And if someone is making decisions around identity and fraud around that, go ahead and share this with them. Make sure they understand that there are solutions out there for them. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.